I'll let the panel introduce themselves. We'll start with you.
Okay, my name is Greg Vandenberg. I'm CEO and co-founder of Bancoris. We're based in Beijing. We're the largest company in the security token space. We operate three parts of the business: blockchain bank, security token exchange, and wealth management platform.
Hey everyone, how you doing? I'm Hunter Horsley. I'm the CEO of Bitwise Asset Management. We launched the first cryptocurrency index fund in the US last year. We manage a suite of indexes, index funds. We're about 15 people based in San Francisco, half with backgrounds in software, half with backgrounds in index funds. My background is on the software side, was at Facebook and Instagram previously.
I'm Jalak Jobanputra. I'm founder of Future Perfect Ventures, which is a venture fund based in New York. We launched Fund 1 in 2014 and currently investing out of Fund 2, all focused on the blockchain and crypto sector.
My name is Wences Casares. I am the CEO of Xapo. We are the largest custodian of Bitcoin.
So, largest custodian, I read that you guys have 10 billion. Is it 5 billion now with the drop in the market?
We don't disclose how much we have in custody.
So talk to me about security. Why do you keep posting pictures of where the vault is?
We have 5 vaults around the world in different continents. We make only one of them, the one in Switzerland, public. And I don't think we've ever posted a picture. People like to post pictures of the vault, and we let them.
So what do you guys look at for custodians? What are things that are important to you?
I'm happy to chat about that. So we manage index funds, and so we're constantly meeting with custodians. We work with a custodian called Kingdom Trust. There are a few things that we consider when evaluating a custodian as a partner. We think about what coins do they offer custody for, what are their fees. We think about their operational security, so how do they approach actually storing those assets. We think about their regulatory stature. And then finally, we think about the institution themselves. How well capitalized are they? What partnerships do they have? What leadership do they have in place? So we look across all of those things. And then, yeah, we use that to evaluate custodians. There are an increasing number of custodians in the space. And I think from our perspective, all of those dimensions continue to get better and better.
What custodian are you using?
Yeah, we work with a firm called Kingdom Trust. They have a trust charter, which makes them technically a bank in the US. They had partnered with BitGo, which some of you might have heard of. How many people have heard of Kingdom Trust or BitGo or probably Xapo? yeah. And Xapo is probably the best known. So yeah, we work with Kingdom Trust, and they custody a large number of coins. They keep them in cold storage. They use a multi-signature configuration where possible. They use Shamir secret sharing where that's not possible. They have reasonable fees. They custody, I think, north of 10 billion in assets, and then have a trust charter, which makes them a great partner.
Well, what are their fees? Because Xapo's free, right?
Yes, Xapo is free.
So what are Kingdom Trust fees?
So fees for custodians range, in our experience, from 25 basis points up to 120 basis points, depending on the custodian, depending on how much you're storing with them, and depending on how much they like you.
So how is Xapo free? How are you guys making money?
We make money by market making. We let our customers keep Bitcoin or any fiat currency they want. And customers, whenever they move from dollar or euros to Bitcoin, or from Bitcoin to dollars or euros, or from euros to Turkish lira, we make that market, and that's how we make money.
Are you going to hold any other coins besides Bitcoin?
No.
Why?
I believe that we are very early in the development of this market, and I don't yet can intellectually convince myself of the value of other coins. I think that there's still a big risk that Bitcoin fails. Bitcoin itself is an experiment. And I think that the risk of all others failing is even higher. So I just don't want to steer customers to assets that I think are too risky. I think that Bitcoin is an asset that Everybody should own a little bit, an amount they can afford to lose. I think nobody should own an amount of Bitcoin they cannot afford to lose because it's risky and you may lose it. In my opinion, there's at least a 20% chance that Bitcoin fails. So that's why nobody should own an amount they cannot afford to lose. But in my opinion, it has a higher than 50% chance of succeeding, in which case it would be worth more than $1 million in less than 10 years. So it's very asymmetrical, right? It's hard to find another bet in which with a non-material exposure, you can have a very material outcome. With an amount of money you don't care, you can change your life. In all other coins, in my estimation, you're better off going to Vegas. So I don't want to promote that.
Amazing. So what's your experience with custodians? Do you use one when you're investing in coins? And
Well, we do. I mean, we did self-custody for a long time. So our first fund was primarily equity. The second fund, we're investing on behalf of our LPs. So, like with my personal coins, I have self-custodied. I'm actually very interested in investing in new solutions because what we have out there right now is very clunky and kind of like so low tech. If you look at the cold storage and printing out keys and then distributing them physically in different places, and I think we're going to start to see more and more software solutions emerge. I mean, I found the privacy talk very interesting because if you can apply that to custody of keys for cryptos. So we're actively looking at investing in startups that are creating new types of approaches to custody other than the kind of the offline ones that exist.
would you say Xapo is clunky?
Well, I think Xapo, I look at Xapo and like I equate it to like Bitcoin. I mean, it's a very kind of simple solution. Not so simple because not everyone can build it and replicate it. But once it's built, it works. But then when you start to think about all these different coins and different coins are custody, different solutions handle different coins, and then having to work with different providers for those different coins, it gets really clunky to have so many different solutions. I think I think it's so smart to focus on one coin that you believe in, and then put in that market making capability on top. The other thing that with some of the emerging custody providers, the fees are high.
Yeah. Sometimes people ask us, they say, your index fund has very high fee. And we say, Bank of New York Mellon doesn't charge the Vanguard S&P 500 fund 100 basis points to store assets. And for our clients, they often care a lot about the custodian. If they know the brand of the custodian, if they know how many assets the custodian is storing. So for example, if Fidelity, if Goldman, if a well-known brand were to offer custody solutions at a higher fee, it could be the same quality, but that might be something that we would do for the sake of investors. So I think custody right now is in a very vibrant phase. There's probably 10 publicly known, very serious vendors, and there's probably another half a dozen who aren't yet publicly known, and I think several blue chip firms will roll out solutions as well. Hopefully they'll all be as sound and well implemented as Xapos. But I think a lot of people are seeking to improve on the space, like
yeah, and I think you look at usability and interface. That is so important, and so the technology has to be sound, or the process of the custody has to be sound, but it can't be so time consuming on the part of the user, and plus then adding all these fees on top of it, but we're going to see a lot of innovation in, I'd say, the next 2 years on that front.
Yeah, for us as a bank plus exchange is very important, the speed element, because you cannot be in a situation where people want to get out or they want to trade, and we have a cash component for custody as well. So we have an EU any bank that we purchased, because banks already actually solve the custody and then work with underlying companies like Xapo, et cetera, to do different parts. Cash custody can be with BNY Mellon or JP Morgan. We focus a lot on security tokens. Well, these represent real-world assets often. It cannot be that if you lose your private key, all of a sudden this house that has been tokenized has no owner anymore. So these are a lot of practical problems that we have. Also, what if someone dies and forgot the private key, et cetera? So that's why we really focus on that part. And for the exchange, speed is really everything. And the best, of course, would be very, very deep cold storage. But if it takes, there are lots of solutions. It takes 5 days to take the tokens out. So for us, it's a constant battle of, okay, how much do we put in the most secure type of storage, and how much do we tear it up?
How do you change that? How can it, what needs to happen in order for there to be more immediate ability to access your funds and move them?
Part of that is the operational approach of the custodian. So if they have personnel who are always on site and ready to move keys and sign transactions, if you have keys or Shamir secrets in multiple locations, you can also try and push the frontier and send encrypted keys over the internet to avoid having to deal with physical proximity. So there are a bunch of small operational pieces to how a custodian chooses to implement cold storage or a multi-signer configuration, and those little considerations result in the features that you would consider as a buyer. I think some custodians also view a 48-hour delay as a feature. If there was to be some sort of vulnerability, or if someone was to be impersonated, adding some delay allows time for recourse. So if you were to be held hostage and forced to request that assets were moved, putting a delay on that could allow time for someone to rescue you or someone to intervene, and let the custodian know that you're under duress. So there's a lot of considerations, and I think also depending on who you're serving, you might lean towards one or the other. So you might care more about user interface if you're working with a consumer. You might care more about how quickly you can move assets around and what exchange partners or OTC desks you're integrated with if you're an exchange. So yeah, I think we'll see people moving and optimizing around the dimensions of specific customer sets.
I heard that you actually send people in person to make sure that they want to move their money. Is that true?
Our customers can choose to have their coins locked in a way that can only be unlocked if they show up in person. And we have some people choose to do that. Whenever someone holding more than $100 million worth of Bitcoin is considering using Xapo, they usually send a due diligence team. And that due diligence team includes financial due diligence, legal due diligence, but most important, cyber security and physical security. And we have, in 5 years that we have been doing this, we have never lost an account over $100 million. They do the same due diligence for everybody in the space, and they always come to us. And that's because when we have to choose between convenience, or speed, or nice user interface, or security, we always choose security. We would never send anything, no matter how well encrypted, anywhere, because it just increases the attack surface. If we find a way to make something safer, we will implement it, and we are doing that every day. I really think that as things stand today, nobody has invested as much as we are in keeping Bitcoins safe. We lose business. Again, we have never lost an account over $100 million. We lost accounts that are smaller than that, especially if they are holding other coins, because we won't do that. And for someone who has a portfolio of coins, it's more convenient to have it all in one custodian. So that does happen to us.
Yeah.
What kind of due diligence do you have to do on your customers?
We are like a bank, so we have to know who those coins that we are doing custody for belong to. If it's a person, we need to have all the documentation that proves who they are. And if it's an institution, we have to have all the documents that prove which one is that institution. It's just like a bank. And then we also have to monitor their transactions and report if we see any suspicious activity, just like a bank.
So what kind of regulation is around being a custodian?
Because when you're a custodian, there are different ways to be a custodian, and there are ways in which the custodian does not have access to the funds or the keys, in which case pretty much no regulation applies, or if you're a hosted wallet like us, in which we take care of the keys, we see our business as solving the problem of keeping those keys secure, but we are liable for that because we control the customer funds. So all the regulations that apply to anyone who holds value apply to us. It's very, very similar to being a bank. Exactly the same regulations apply in terms of knowing the customers, monitoring the transactions, etc.
Did you have to get a bank license?
We are applying for a trust license in the US, which, like he said, it's like a bank license, and we are applying for bank licenses abroad.
So there's a concept in relevant pieces of regulation in the U.S., the Investment Advisors Act of 1940, the Investment Company Act of 1940, that stipulate that if you're holding a certain percent of assets, or a portfolio of which a certain percent are securities, you have to work with what's called a qualified custodian. And this is sort of a cloud of confusion and uncertainty that has surrounded custodians. The way that the piece of regulation is written today is that in the U.S., if you have a trust charter, if you are a broker-dealer, so a FINRA registered broker-dealer, if you're a foreign financial institution, or there's a fourth thing, it's a futures and commodities trading a facility, then you're considered a qualified custodian. And that's a distinction that there is some lack of clarity around, but it could be the case that many fund managers need to be working with a custodian that has that stature, and a custodian would achieve that stature through one of those four authorizations. So that's an element of regulation that I think people often are thinking about, talking about, and considering with custodians. Yeah.
For us, all our licenses are in the European Union, or most of them, so we fall under the ECB. And there's no clear requirement on Bitcoin and the utility tokens, but on security tokens, they are considered as securities, and so they're clear, the banking license, et cetera, and securities exchange license. There's clear regulation on how much equity you have to put up per deposits, and then we have a lending component as well, so that goes into the factoring as well. So that this regulation for especially security tokens and cash is very, very clear cut.
Yeah.
And there's no room for error. I mean, the ECB is very, very risk aware, and so it's just a calculation that we calculate continuously on our group level as well as on the level of the different parts to our group, so that there's no systemic risk in the system. Yeah.
Well, where are you based?
I'm personally based in Beijing, and we have 50 people in Beijing. But the licenses that we have, of course, are all out of China. I wish I had a bank in China, but yeah, we focus on the European Union with our licenses. We bought. I mean, for us, we come from the wealth management side, and the big question many people will have is, everybody's talking about all these institutions and family offices moving into crypto, but it's sort of not happening. And the main reason, especially on the Asia side, is this trust factor. There's no third-party custodian for a lot of these assets, and so we had the feedback from a lot of our clients. Look, if there was a bank doing this, this would have solved. So it's not like, oh, what is the cold storage solution they use? And no, if it's a bank, then I trust it. And so we were like, okay, why don't we just purchase a financial institution rather than go deeper in the technology? And we work with other third parties. We have people at Tanium, et cetera, that we hire to focus on the cold storage solution. But we have this banking layer on top of it. So people have the perception, oh, it's a bank, so therefore there's a trust factor to it, especially for Asian clients, which still are most of the people in, most of the transactions in crypto and the holdership, et cetera, comes from
But you just purchased the banking license, basically, right?
No, the actual,
the infrastructure, but
yeah.
it gave the rest of your company credibility because you had that license.
Yeah, correct.
Yeah.
So I think for many investors, they're used to facing off with counterparties like Goldman Sachs or J.P. Morgan or Bank of New York Mellon, or they custody with State Street. And so I think that a conversation that we're often having is how do they know that they can trust this custodian? And the basis for that, from our perspective, is the way they actually, the technology and the operational processes that they have around storing the assets. But for a lot of investors, there are certain brands and firms that they trust. And those brands and firms, many of them are working on custody solutions, but none of them have brought them to market yet. And so I think that that reputational piece, which actually has very little to do with the technology challenge, is also an important issue in custody.
Yeah, and as far as the startups that I'm investing in or looking at in this space, I mean, the advice I do give to them too is to look at who potential banking partners could be for that credibility, because it is challenging, especially when you're dealing with larger amounts of crypto holdings that it's unlikely that a startup is going to be trusted with that without a more brand name partner.
When do you think that's going to happen? And when or if that does happen, do you think that would just completely change the market?
A large financial institution? Oh, it's 6 months.
Really?
Yeah, absolutely. Yeah.
Which one?
Well, I mean, we just saw the announcement of Bakkt. I think, we're still trying to
Bakkt,
figure out what,
There's Goldman, Apex Clearing said that they'll have something out in Q4. There's a number of others who I don't think have been super public about it, but have been, 200 people working on it for a year. I think more exchanges will also roll out offerings. So Coinbase created an offering. I think some of the other really well-known exchanges will have custody offerings because obviously it's intrinsic to what they do that they have to think about wallets and how they're moving assets. So I think that there are about 10 really serious custodians today, and I think that there'll be at least half a dozen more, and I think that we'll see the first sort of blue chip bank in half a year or sooner.
So once that happens, is everything going to change?
I would just add to that, many of you are probably familiar with Nomura. So they're not offering a solution directly, but they announced a joint venture to work with Ledger, which produces a consumer HSM or hardware device that allows you to store assets. And so it's another instance of a well-known firm moving towards providing a solution in the space. When that happens, I think it'll be a big deal for many investors, especially on the institutional investor side. A lot of it is, people don't want to get fired. People don't want to. There's that saying, you never got fired for choosing IBM. Like, people are thinking about the investment thesis, where this would fit in their portfolio in terms of is it an alternative, is it a commodity, whatever. But it can't disappear. And if you go with a custodian that's unknown, your boss may not care that they had the best implementation of multi-sig or that they had vaults in multiple jurisdictions. They should care about that, but they may not, especially if it's a 50 basis point allocation. They may look at it and say, you went with a custodian that we've never heard of, and now the money's gone. So I think that if a best-in-class implementation can be offered by a really trusted institution that's been around for 100 years, that has a balance sheet of $50 billion or more, that'll be a very large sort of concern that's removed from investors who are considering the space. Though, I mean, obviously, many institutional investors and sophisticated investors already invest in the space, and some of them are willing to sink their teeth into understanding Xapo and even more esoteric firms than Xapo. But I think that'll be a really meaningful moment. Yeah.
Do you agree with this, Wences?
Yeah, I think that we will be stuck in this stage of the industry until you can get Bitcoin and other cryptocurrencies the same way that you can get any other stock or bonds or euros or yen, right? So you should be able to call your broker and say, I want some more Bitcoin, I want to sell some Bitcoin, or your bank. And while we don't get there, we will be stuck here. In order for this industry to progress, that's an important step that we have to make. And that's done with a large ecosystem of companies, not with one or two that do a good job. I believe that there will always be a market for people who say, I don't care about branding, I don't care about checking a box in my form. I just want to make sure that my Bitcoin are as safe as they can be. And we will always be there for them. Some other people rather go with a brand. Some other people go with something that checks the box because want to be fine. And some people say, I'm going to do all the homework and I want to make sure that they are stored as safely as it can be done with today's best practices and today's technology. And we'll always be serving that market.
I think another advantage of a pure play provider is you evaluate a vendor at a point in time, but then you also have to think about will they remain on the edge and will they continue to prioritize investing this and having the right personnel around it. And so we're talking about the merits of a long-standing firm or institution and the trust that can give people. I think the downside to working with a partner like that is it can be harder to know that initiative will be getting the specialists around it, will be getting the attention around it that a pure play firm that is fully focused on crypto assets specifically would be affording it. So those are trade-offs.
And this is something that none of those firms has done before.
Yeah.
It's completely different. So people think that the biggest hack we'll ever see in crypto was the Margaux hack. I'm willing to bet money that we haven't seen the biggest hack yet, and it will be one of these institutions making a mistake. It's not like anything they've done before. And they will go from too cautious to too eager, and doesn't take, there's many of them. One of them will make a mistake, and at their scale, that mistake is an expensive one.
That's where I see the opportunity as an early stage investor in the sector, because you could argue that, well, we're just going to see the big players come in and they're going to be the majority of the market. But given how quickly the technology is moving and how nascent it is, that having folks that are specialized is so important, and these large institutions aren't nimble enough a lot of times, and so I see more of like partnerships. It may be white labeled or whatever, but I don't necessarily see these large institutions taking everything in-house because I don't think they have the support systems to do that.
We already do this for institutions who offer Bitcoin custody for their customers. They hold them with us in turn. Right? For us, the customer is the institution. It's only one customer. And they know who their customers are. We don't. For us, the customer is the institution. But we work in a number of instances where institutions say there's no way we're going to put this together, maintain it, run this risk. They use us for that.
I mean, if you look at this, perhaps more anecdotal evidence, but in Asia, most of the people that we know that worked at the forefront of blockchain for HSBC, Goldman Sachs, Morgan Stanley, they're not anymore at these banks. They've set up, if they truly understand blockchain and believe in it and see the revolution coming, then they're not there anymore. Then they're at their own startup or at Xapo or any other companies. So, which means that it will be very difficult for them, since it's not a priority, to hire the right people to do that. So I fully agree with your view that
I think we are all speculating here because nobody knows what the large firms are going to do. You said, many of them are working on it. Many of them are investing significant dollars and large teams on it. I think the sooner it happens, the better for all of us, the better for the industry. This feels like the internet in '92. I cannot wait for it to feel like the internet in 2001. A lot of things had to happen. I hope you're right and it happens in 6 months. I would not bet money on that. I think it's a risky bet. They are more risk averse than the telcos were, and the telcos did not get anything right with the internet. And they're more slow and more regulated. They have to get there, but they're taking a long time. Some of them have been working on it for 3 years and still nothing to show for it. Many of them are talking to us to do it with us. So the sooner they do it, the happier we would be. It's just that they move super slowly. They're super cautious, right? And it's not clear internally who wins. It's very clear who loses if they get it wrong.
If you have a committee that has to approve a decision and there's 2 people on the committee that hate crypto for one reason or another, I think that also...
And then you have super simple issues that are hard to overcome. Like the auditors will say, we won't sign your financials if you touch that, right? Yep. Hard to find a big four that will say yes. And try to find a CEO or a board that will go against that. Or someone on the board will say, you know what, I won't sign on that. I don't want to be liable. And that freaks everybody out. So there are many, many ways in which that gets stopped. And there's only one way in which it gets approved. So it's a tricky proposition.
I think also sort of related to this, you've seen among the traditional financial institutions, some of the ones who've invested the most in crypto are ones that are family-owned. VanEck, Fidelity, where the ability to drive decisions through the organization is more consolidated around an individual decision maker.
Yeah, and even in those cases, they have those issues with the auditors, or they're, or with board members.
Absolutely, yeah.
Would you say custodians are the number one thing that they're most concerned about, or is it price, or what's really stopping?
I think that it depends on what you're trying to solve for. If you want broad institutional adoption, which is far away from happening, I think I wouldn't say custodians, if they could just call their normal broker, if they could call Goldman or whoever they work with and say, hey, get me some Bitcoin, they'd be doing it. And a lot of people who are not doing it and won't do it until that's possible. From that point of view, custodianship is important. From the point of view of the ETFs and others, the custodianship is not such a big deal. It has been solved in other issues. We are already the custodian of all the Bitcoin-denominated public funds. From the ETF point of view, the biggest issue is the price formation and price discovery and price formation, because from the point of view of regulators, price discovery and price formation happens in exchanges that are not regulated. The price lends itself to be manipulated. There may be indications that it is manipulated. So I think that the biggest hurdle for the ETFs is more how do they solve for price discovery and price formation? What is the right, what will be the price index for those ETFs, etc. I think that's the biggest hurdle.
Super interesting. I know we could keep going, but we're out of time. Thank you so much,
Thank you very much.
panelists.